Hey, what's up, everybody? Welcome to the 40 Finance channel. I am back from a sort of combination vacation / getting away from the stock market for a couple weeks. It was very refreshing, but here we are coming off of PayPal earnings yesterday, and there's a lot to look at and talk about, and I'll share my opinion. So it's the perfect day for me to jump back in. So let's take a look at PayPal stock, and I'll share with you some of the good news we saw in those updates and maybe some of the news that wasn't as hot, but what we can look forward to in the future, including an updated price target from me. All right, flipping over here to Seeking Alpha to check in. Always a reminder, if you're interested in learning more about Seeking Alpha and the features I use all the time here on this channel, there's a special discount for you down in the description if you use my affiliate link, so go check that out. And you see PayPal stock here, $98.99 as of this minute, 11:07 a.m. And it's been hovering between like plus 8% and plus 12 or 13%, depending on how the NASDAQ in general has flowed throughout the day. But let's jump into the details from yesterday. And this article right here does a pretty good job of the synopsis. We'll dig in a little deeper, but PayPal is jumping 13% in pre-market, so we obviously landed around 10%, after the company announced $15 billion share repurchase program, we'll talk about that, and agreed to work with activist shareholder Elliott Investment Management. So that Elliott Investment Management, that sort of activist shareholder news, actually lifted PayPal up. I think that was a week or two ago that was announced. And as we've seen here in the earnings call, they're potentially offering this person or this firm a board seat. They really want to hear the ideas. They're doing a good job of playing the game from the activist investor standpoint. To be honest with you, I think this news gets more press than it probably is worth reading about. But anyway, fiscal year 2022 repurchases are expected to reach $4 billion. So $4 billion this year. And this is another headline. You have $15 billion share repurchase program. You see stuff like this a lot. $15 billion is a huge number, but it does trickle out over time. It's not all going to happen here in 2022, but it is good to know that they've set aside money in the future for stock repurchases. If you believe in that, PayPal is not a dividend stock, so in my opinion, this is a good move for all of us who have been holding. Not only does it take shares off the market, but it increases our individual shareholder EPS over time. So if you combine growth with share repurchase programs and you find that delicate balance, you can really see EPS go up for each of your individual shares. No better example of that in the whole world than Apple stock. So go check that out if you're interested in learning more. See down here, the company is entering an information sharing agreement with the activist investor to continue collaborations across a range of value creation opportunities. They also go on to say, we expect operating margin expansion beginning in the fourth quarter of this year and continuing into 2023. The company is targeting at least 50 basis points of operating margin expansion next year. And then it closes with a quote from an analyst. While PayPal might be one of the most exposed names in our coverage to consumer discretionary, PayPal's margin upside potential may be too significant to ignore. And that quote comes from analysts over at SMBC. All right, so that is Seeking Alpha, at least their news desk. That's their take of the happenings yesterday. And just a quick refresh, if you're new to the channel, PayPal is one. I own 125 shares. And I have a cost basis of $168. So the news is good. I'm definitely going to take this news over another 10% down, but I have a ways to go before I break even on this one. But it's definitely positive momentum. And the other side of my cost basis, because I average down, is I have shares that I bought maybe over a year ago that are at a much higher price point. So if PayPal continues to go up or traject upwards, not only do I get closer to my cost basis. But this 125 number is interesting because I could, at the end of the year, conceivably sell 20 or 25 shares that I paid a much higher price for, which would not only bring my cost basis down, but it would allow me to offset, from a taxable perspective, some of the other gains that I had this year. Okay, now let's take a deeper look at this earnings call presentation. This is a nice feature in Seeking Alpha where they just upload the presentation right here, so you don't have to go to a different website. And I'm going to cherry pick a couple slides I was looking at, and I'm going to start with this stock buyback program, okay, because that's going to get a lot of press. And this is under their leadership, resiliency, and shareholder value initiative slides. And if we go down here, here is the actual update of the $15 billion share repurchase authorization. Not sure if this text shows up very well on the screen, but I'm going to read out the important parts anyway. They go on to say they have returned $2.25 billion to shareholders in the form of share repurchases in the first half of 2022. And the fiscal year total share repurchases are expected to reach $4 billion. So we've already had 2.25 billion buybacks that have occurred. So more than half of the expected 4 billion has already happened. Okay, so they've got another 1.75 billion to go, which is a lot of shares. But I don't want people to buy this stock expecting a $15 billion buyback program before the end of the year. That's not how this thing works, okay? Now, it's all good news at the end of the day, but I just want to make sure everybody understands the difference between the headline of 15 billion and what is actually going to happen here in 2022. Now, the other thing that's very positive here in the middle on efficiency opportunities, they say fiscal year 2022 outlook incorporates $900 million of savings across transactional and non-transactional operating expenses, aka they're cutting back operating expenses. And on an annualized basis, these fiscal year 2022 savings, in conjunction with additional initiatives, are expected to save at least $1.3 billion next year in fiscal year 23. Expect to reinvest a portion of the gross savings into high conviction growth opportunities and to drive operating margin expansion again in 2023. So what I really like as I went through this investor deck here is I like that we don't just have a single winning quarter, okay? Because in my world, that's not going to be enough. When you're at a cost basis of 168, the stock's trading in and around $100, one blip on the radar isn't going to be enough to get me back to par. So looking ahead to 2023 is very important because 2023, as you'll see when I get into my cost projection, is really the key year for if this thing is going to come back. All right, lastly on the good news was really just all of these things, a combination of all of these things on the summary. So you had a 6% increase in active accounts. It's not double digits, but considering how much concern there has been around e-commerce and shopping, I'll take an increase over a decrease all day. Most importantly, though, this customer engagement tile they have here, 48.7 payment transactions per active account, which is a 12% increase year over year. This is one of the things when PayPal was struggling coming out of Q1, they talked about doubling down on their power users. And at least here initially, that plan is taking off at double-digit increase year over year, and that's comping against Q2 of 2021, which was a very heavy e-commerce timeframe, right? So that's a good start. As far as TPV, total payment volume, 340 billion, that's plus 9% year over year, 13% on Forex neutral, and then 11% growth if you take out eBay, which, you know, we're coming to the end of the eBay world where we even have to talk about it anymore. But I think we go through another quarter of eBay comps and then PayPal's off doing their own thing, and we don't have to talk about eBay comps anymore. So here's total payment volume, the $340 billion in payment volume. That's right in line with Q4 of 2021. Obviously, Q4 of 2021, holiday shopping, COVID closures, right, during that time. So it's a nice number to come in line with Q4, and it's obviously over Q2 of 2021. Then they got cross-border trade, which is important. That's particularly important for a company like Visa. It's not as important for PayPal, but even they note, I think over here, cross-border trade is primarily comprised of e-com goods and related activity, limited exposure to the recovery of travel. So don't overreact if you're like, well, why is this down when travel's back up? They're calling out, directly that it has very little to do with travel. Customer engagement, we talked about this just a second ago, transactions per active account. You see here in Q2, you're at 48.7. And when you compare that even to a holiday shopping season, 45.4. And last year at this time, they were at 43.5. So you're getting a lot more transactions per customer, which is a very good sign. Then we scroll down to revenue. So revenue not as strong as Q4, since I keep doing that comparison. It is over last year's Q2, and it comes out to be 9 or 10% increase on the year. And finally, we have non-GAAP EPS, Q2, 93 cents. Last year in the same quarter, where is that? $1.22, so minus 30 cents. And this is some of that core valuation that we've seen drop out of PayPal, because instead of growing non-GAAP EPS, they've actually taken some hits, some negative comps recently in that department. So the good news is it was up from Q1 of 2022, so that's a positive sign. And they talk about it, and this is where PayPal, I feel like, let me down the most, is some of their behind-the-scenes transactions or behind-the-scenes accounting metrics really dragged down these non-GAAP numbers. But hopefully we're getting past it. They made a note of it. Non-GAAP EPS declined 22 cents relative to 2021, which was an 11-cent headwind from lower eBay transaction margin dollars, and then lapping an 11-cent benefit from the release of credit loss reserves. So basically, if you want to be honest, they tried to cover up the eBay margin dollars by releasing some credit reserves, and that turns into a double whammy when you're looking at this quarter. Then in addition to eBay and the lapping of the credit reserves, GAAP EPS of minus 29 cents. That's right, they actually came in negative 29 cents on GAAP earnings. Thankfully, most PayPal metrics are non-GAAP, at least as they relate to Wall Street, but it's not positive, right? But they go on to explain it includes a negative impact of 37 cents associated with a discrete tax charge related to acquired intellectual property. So somehow when they purchased this intellectual property, or they transferred it or whatever, they got a tax bill for that, which obviously hurt. They also had a net negative impact of 65 cents related to PayPal's strategic investment portfolio. So I'm guessing on this one, considering what we've seen in the stock market, that their shareholder interest in certain private companies, that value has declined, and or some of these companies have either went out of business. These could be very, very small companies when you're talking about who PayPal would invest in. So they could have went out of business, or PayPal could have sold whatever interest they had in these smaller companies, startups, etc., because they just didn't like the way things were going. And if you sold anything in March, April, or May, then you probably took a loss for it, right? All right, and then finally, one of the big home runs we saw was this free cash flow. If you look at Q2 of 2022, you had $1.3 billion, which is up, give or take 20% over the same period last year. So good news on the free cash flow, not as high as Q4, but a pretty impressive increase. In Q2 of 2022, for every $1 of revenue, PayPal generated 19 cents of free cash flow, and of course revenues were up, so that is very good. They have $15 billion in cash and cash equivalents and long-term debt of $10 billion. Okay, so I kind of mixed in positives and negatives. The big negative for me was the Gap show. Okay, so Gap coming in negative. They explained it. Hopefully it's a one-off thing, but we would much prefer Gap EPS numbers to do better than negative. I guess on the bright side, it offers an opportunity for them to comp in the future. And then the other negative I'll call out, just because I talk about it a lot on this channel, is, that sort of revenue and non-GAAP EPS. I hope for double-digit increases on both sides. Now, if you look at non-GAAP EPS, it was actually down 19% year over year. It's not the double-digit growth that I typically look for. And then on the revenue side, revenue was good, but it did just miss the double-digit mark. For me personally, and the things that I look for, I would target companies with plus double-digit growth rate, both in EPS and in revenue. PayPal still has an opportunity to do that for the fiscal year, which is the most important thing, but this quarter came up a little short in both of those categories. The last headline I want to show you, take a look at this. Buy now, pay later volume surged 200% year over year for PayPal. And the reason I'm showing this is because I kept talking about, as those Affirm stocks were popular, and there's some other small cap BNPL names. I'm like, hey, if you want BNPL, just buy PayPal. Like, what are you doing? And I think, some people might have laughed at that back in the day, but we see the opportunity that's here with PayPal, and it's obviously grown. Let's try to catch a quote here. BNPL activity has been ramping, marked by $4.9 billion in volume, up 200% year over year, used by 22 million consumers, and offered by more than 200,000 merchants. So to me, it's mixed news. It's good news if you're like an investor who thinks buy now, pay later is the future of everything, which I feel is like a thesis I've read from quite a few people over the past year or two. It does offer some risk, and I'm glad that it's not a core element of what PayPal does, but it's very interesting from a lot of different angles, including the United States consumer, that BNPL activity is through the roof right now at PayPal. All right, so where do I see PayPal landing here at the end of the year? And I'm going to make it really easy. We're going to go in here to the earnings estimates, which have obviously been updated here recently now that we have new information. And next year's EPS, this is going to be the non-GAAP EPS, coming in at 476. You got a low of 4 and a high of 570. Just for the sake of factoring in, potential drop-off in consumer activity, I'm going to go down and say 465. So if you're at 465 for your forward PE denominator, and PayPal right now, as you see, only has a forward PE, well, heck, it's less than 20. I changed that a little bit because I changed this number to 465. I think realistically, PayPal can trade at a 25x. That's actually slightly lower than the 29.30 that they typically traded at in previous years before this whole COVID expansion of PE ratios. So I'm going to give it a potential for 25. And let me just do some quick math. 25 times 4.65, that would put you a price of 116. So 116, when we flip over to the next calendar year, from a forward perspective, that could come as early as maybe even November. All right, so, if PayPal got to 120, or let's say 125, and you got in on the dip, then I would consider potentially taking some profits. If you bought at the $70 mark, that's probably when I will sell my 25 back-end shares that I paid way too much money for, try to do that tax loss harvesting. But, that's just me putting a number on it. I see 120, 125 being probably the high mark for PayPal prior to the end of this year. Now, a lot of that, of course, depends on them continuing this success run. But if they squeeze their costs even more, produce even more EPS, and have a great holiday season, then all of a sudden you could be talking about a much bigger game. But in the short term, I don't see, too far over 120, put it that way. All right, guys, so that's my immediate reaction to PayPal stock earnings. It's one of my top holdings. I talk about them all the time. Hopefully you enjoyed it. Hopefully you picked up a couple tidbits that other channels don't follow. Before you go, make sure you check out that Seeking Alpha special offer in the description. Hope everybody is doing well. We'll see you on the next video.